All right, let's talk about money, specifically how to make sense of the world of investing. Today, we're going to break it all down and demystify your dollars, making this whole complex world feel, well, a lot more simple. Does this feel familiar? Stocks, property, crypto? It feels like there are a million different directions you could go, and it is just overwhelming, right? If you've ever felt completely paralyzed by all the choices, trust me, you are not alone. But what if we could organize all that chaos into a simple framework? Well, that's exactly what we're about to do. Okay, so the secret to all of this, the one big idea you need to get, is something called an asset class. Now, don't let the fancy name fool you. Just think of it like the food groups for your money. Seriously, you wouldn't build a healthy meal using just one food group, and you shouldn't build your financial future with just one asset class. Some are for growth, some for stability, they all have a different job to do.
So let's start at the bottom of the pyramid, the absolute foundation. We're talking about the one asset class we all handle every single day. Good old-fashioned cash.
You know, cash is kind of funny. On one hand, it's the safest thing you can have. It's right there when you need it for an emergency, a vacation, a car repair, anything. But it has this hidden dark side, a silent killer of your wealth, and its name is inflation.
And here's exactly what I mean. Let's say inflation is at 5%, so prices for everything are going up that much, but your savings account is only paying you 3% interest. You might feel like you're making money, but in reality, your money is losing 2% of its buying power every single year. It's literally getting weaker. And that's why cash is fantastic for safety, but it's a terrible long-term growth plan.
Okay, so let's start building out what I like to call our investment menu. This is going to be our guide for the day. First up, we've got cash. You can see it right there. Risk is super low, returns are also pretty low, but you can get it instantly. It's perfect for that emergency fund or any goals you have in the next, say, 5 years. Keep your eye on this table because we're just getting started. All right, our safety net is locked down with cash. Now it's time to talk about the real growth engines. This is how most people build serious wealth over time. Let's dive into the world of stocks.
Now, trying to pick individual stocks, that can be a wild ride. When you buy a stock, you're literally buying a tiny piece of one single company. And the difference between picking the right one and the wrong one is just staggering. Pick a winner like Apple 20 years ago and your $1,000 turns into $130,000. But if you backed a company like Blockbuster back in the day, well, that same $1,000 is worth exactly zero today.
Here's a simple way to think about it. Buying a single stock, that's like going all in on one giant chocolate bar. It might be the best chocolate bar you've ever had, but you're pinning all your hopes and dreams on that one bar.
But an index fund, now that's different. An index fund is like buying a whole box of assorted chocolates. You get a little bit of everything. Instead of betting it all on one company, you're buying a tiny slice of hundreds of companies at once, like all the big ones in the S&P 500. So if one of those little chocolates, one of those companies, turns out to be not so great, it doesn't really matter. It doesn't ruin the whole box.
And you know what? That box of chocolates strategy is incredibly powerful. Just by owning a piece of the whole market through an index fund, historically, investors have seen an average return of about 10% a year. And get this, that number includes every single stock market crash and recession we've had since the 1950s. It's pretty amazing when you think about it.
Okay, let's pop these onto our menu. You see individual stocks over there, high risk, but with that potential for huge returns. Then you've got index funds, more of a medium risk, giving you those solid market average returns. They're both for long-term growth, but you can already see how an index fund is a much more stable foundation for most people. Okay, so we've got our safety cash and our growth engine stocks. But what about assets that kind of do their own thing, that march to the beat of a different drum? These are our diversifiers, and their job is to bring some balance to our financial plate.
Ever thought about investing in property, but then you imagine leaky toilets and late-night calls about rent, and you're like, no thanks? Well, there's a much, much easier way. It's called a real estate investment trust, or a REIT. It's basically as easy as buying a stock. You buy a share, the REIT owns and manages a bunch of properties, like shopping malls or apartment buildings, and you just sit back and collect your share of the rental income. Simple as that. And then there's gold. This quote just nails it perfectly. Gold isn't really there to make you rich. It doesn't produce anything, it doesn't pay you an income. Its whole purpose is to help you stay rich. Think of it like financial insurance. When everything else is going crazy, gold tends to be that steady, safe haven. Let's get these on the menu. See? A REIT slot in there as a medium risk play, giving you a nice mix of income and growth. And gold fits in as a low to medium risk asset, really designed for wealth protection.
Now you can start to see how a really balanced portfolio is coming together.
All right, time for the main event, the one everyone's talking about, the most volatile, most misunderstood, and maybe most exciting asset class out there. Let's talk about the true wildcard, cryptocurrency.
So what is crypto, really? When you get right down to it, it's not just about buying some digital coin. It's a bet. It's a high-stakes bet on a whole new kind of technology, a future with a decentralized financial system. And a bet that big, well, it comes with a ton of volatility. And when I say volatility, I mean it. The swings are just mind-blowing. In a bad year, you could lose almost everything you put in. But in a great year, the returns can be off the charts. And this brings us to the absolute #1 rule of crypto. Never invest more money than you are totally okay with losing. And here it is, the whole shebang, our complete investment menu. Just look at this. From the absolute safety of cash, all the way over to the pure speculation of crypto, it's all laid out side by side. I'd say pause here for a second, really look at how the risk, the potential returns, and the purpose of each one is different. This single slide is basically your cheat sheet to the entire world of investing. So we've got this amazing menu in front of us. Now what? How do we actually use it? Well, it's time to stop thinking about the individual ingredients and start thinking about putting together the whole meal. And this right here is probably the most important thing you'll hear today. It is not about finding the single best investment. That doesn't exist. It's like asking what the best food is. The real goal is to find the right mix for you. It's about building a portfolio, a combination of these ingredients that actually fits your goals, your timeline, and what you're personally comfortable with. So I'm gonna leave you with a question. Now that you have the menu, think about your own life. What are you building towards? A down payment in 2 years? Retirement in 30? The answer to that question will tell you exactly which ingredients you need. So what ingredients will you choose for your financial meal?